Hi, and welcome to Until 9 Million. This is episode 5, and we are 530 weeks until 9 million. Hi, and welcome back. This episode will be a continuation of last week's episode. I was talking about shares last week, what a share is, and how it works. Now, this week I will continue on that, so maybe if you haven't heard the previous video, so you can go back and click on the link, or you can just listen to this episode, of course. This episode will be about buying and selling shares on the stock market. If you want to invest in publicly traded shares, then you obviously have to buy them on the stock market. Now, buying shares does cost money. You don't you don't put in the money just to buy the shares, the price of the shares, but you add a little bit of costs to trade the share. That goes to the broker who does the transaction. So buying really small amounts of shares is usually a bad thing, because if you, for example, buy 3 shares of 10 euro, which is 30 euro, and you have to pay 5 euro transaction costs, then those 5 euro are a really big number in comparison to the 30 euro you're going to invest. Now, if you buy for 2,000 euro shares and you have 5 euro as a transaction cost, then obviously that 5 euro is not that much of a price increase on your 2,000 euro shares you're going to buy. When you buy, you always have to keep in mind that you also pay an extra cost on that. Now, we all know you have to buy low and sell high. Everybody knows it, but not a lot of people do it right, because shares are influenced by emotion. Let's say you buy a share and you think the company is doing well, and suddenly there's a press conference and the company announces something bad, then the price will drop. Now, what a lot of people will do is, oh my God, the price is dropping, we have to sell this share because it's going to be less worth soon, and then we lose money. So a lot of people jump in to sell the share, and of course the price will go down because the supply is much higher than the demand. So you're selling low, or you're going to try to sell when it goes low. Now, when a company does really well and the price of the share goes up, then people say, oh, look at that company, it's doing really well, I have to buy shares of that company. And most people buy already when the price is already too high. So buying low, selling high is usually quite difficult. Now, what you could do as well, and anyway, buying and selling shares on a short term is like playing on the lottery. You never know how it will go in a short term. In one day, the price can go up, down. So it's a bit of a lottery. Now, if you want to make a sound investment, you have to take shares in the long run, or invest long term. Something I forgot to tell you as well, if you have to pay taxes usually when you buy shares or sell shares, depending on which country you are. But some people or some countries tax you an amount of money that you made on the share, or tax you as well on the dividends you get. So keep in mind that you have to check this out, how much your country actually taxes your profits. Let's get back to the long-term investment. So what do you have to do to have a sound investment? Well, first of all, it's a good thing to spread your investment, to buy shares of multiple companies. Why? Well, if one company goes broke and you have put all your money in one company, then your share will be worth nothing. So shares are inherently big risk. So let's say if you buy shares of 10 different companies and one goes bust, you've lost a bit, but not a huge amount of money. It's only 10% of the value of your total portfolio. So it's much better to spread your investment than buy across many companies. Now, you already feel the problem here, and that is, if I have to buy a big amount of shares of one company to offset the transaction cost, and I have to buy from different companies, let's say 10, then you're gonna have at least, let's say, an investment of 20,000 euros. Because 2,000 a company and then the 10 different companies is 20,000 euro or $20,000. Something doesn't really matter which currency. Now, that is a lot of money already, and especially to put in a stock market, because I would never advise to put all your savings in the stock market. Try to put like 30% or so, or 40% in the stock market, but definitely keep some savings in cash and ready available or in low risk investments. So that means that you already need like something like 50,000 euros in savings before you can actually invest something in the stock market. Now, luckily, there's other means of doing that. Okay, that was it for this week's episode. Next week, I will still be talking about stocks and shares. And in particular, I will be more going into how you can manage your portfolio a bit more efficient. So even if you don't have a lot of money, you can still enter the stock market. And I will explain a bit more about what an index is. So stay tuned and please join me next time. Bye.